Welcome, friends. Today, we'll continue with the circulars that we were discussing on the last occasion. For last 2 days, I could not take the session. For the last 2 days since I was traveling. On the first day, I landed around 10, and on the second day, again, there was some function. So the only option was either to postpone or to take after 10:30 at the evening. So, anyways, now let us continue with section 7 circulars that we were touching upon. And I think let me share the file first. Yes, I think the screen is visible now. So
Sir,
on the last occasion, we have touched upon circular number 116 of 2019, which was levy of GST on the service of display of name. If any name is getting displayed for the donors, if it is not reflecting any organization, if it is not for the purpose of any marketing sort of thing, then in that case, the GST will not be applicable. Otherwise, it will be considered as a supply, and therefore GST will be applicable. So that we have already done. Now we'll be starting today with circular number 121 of 2019, 11th October 2019. Let me just open up the page. Yes. Now, this is 11th October 2019, and the subject is GST on license fees charged by the states for grant of liquor license to vendors. So the liquor vendors, they are making an application for the licenses, and there is a license fees which is being charged by the state. So the question arose whether GST will be applicable on that or not. So what is the clarification which is given? See, legalities, arguments, everything can be done. Tax professionals can have their own view, but this is what is being provided as a clarification by the government, by the board, and it is binding on the departmental officers. So therefore, we must be aware of what is being clarified, how it is being clarified, whether we are agreeing with that clarification or not. In case we are not agreeing with that clarification, then there are two options. Either we can challenge the circular itself, or we can submit our own view in case of any litigation or dispute. Services proved by the government, basically it has to be provided by the government to business entities, including by way of grant of privilege, license, mining rights, natural resources, such as spectrum, etc., against payment of consideration in the form of fee, royalty, etc., are taxable under GST. I'm repeating this. This is very important line. It says services provided by the government to business entities, including by way of grant of privileges, licenses, mining rights, natural resources such as spectrum, etc., against the payment of consideration in the form of fees, royalty, etc. So there can be any mode of payments, but that will be treated as consideration, and therefore it will be taxable under GST. This is what is mentioned. Same was the position under the service tax regime also. With effect from 1st April 2016, tax is required to be paid by the business entities on such services under reverse charge. So the tax was required to be paid even in service tax from 1st April 2016, and was supposed to be paid by the business entities under reverse charge. Business entities were the service recipients. Now, GST Council in its 26th meeting held on 10th March 2018 recommended that GST was not leviable on license fees and application fees by whatever name it is called, payable for alcoholic liquor for human consumption, and that this would apply mutatis mutandis to the demand raised by service tax or excise authorities on license fees for alcoholic liquor for human consumption. In the pre-GST era, that is for the period 1st April 2016 to 30th June 2017, that is till the implementation of GST. So what was held in the GST Council meeting? So GST Council, this meeting held on 10th of March 2018, it is said that it was recommended that GST was not leviable on the license fees and the application fees, whatever name you can call, but this is not applicable, which was payable for alcoholic liquor for human consumption. And this will apply mutatis mutandis to the demand which is being raised by the service tax or excise authorities on license fees for alcoholic liquor for human consumption in the pre-GST era. So they have clarified that if it is for the license fees for alcoholic liquor for human consumption, then GST will not be applicable. Grant of liquor license by state government against payment of consideration in the form of license fees, application fees, etc. was a taxable under service tax. Therefore, to implement GST Council's recommendation, central government decided to exempt service provided or agreed to be provided by way of grant of liquor license by the state government against consideration in the form of license fees or application fees by whatever name called during the period 1st April 2016 till 30th June 2017. Clause 117 of Finance Act number 2 Act 2019 may be referred in this regard. So therefore, for this period, it was a notification issued and the central government has exempted for the payment of any tax. Now, what has happened further? GST Council in its 37th meeting held on 20th September 2019 further recommended that the decision of 26th GST Council meeting be implemented by notifying service by grant of alcoholic liquor for human consumption against consideration in form of license fees or application fees or by whatever name it is called by state government as neither a supply of goods nor a supply of service. So therefore, it was recommended by the GST Council in its 37th GST Council meeting that it has to be notified as neither a supply of goods nor supply of service, and therefore it will go and sit in Schedule 3. Therefore, in exercise of powers conferred under subsection 2B of Section 7 of CGST Act, notification 25/2019, dated 30th September 2019, has been issued. GST Council further decided in the 37th GST Council meeting held on 20th September 2019 to clarify that this special dispensation applies only to supply of services by way of grant of liquor licenses by the state government on as an agreement between the center and states and has no applicability or precedence value in relation to grant of other licenses and privileges for a fee in other situations where GST is payable. So therefore, they have now at the end clarified that if it is for alcoholic liquor for human consumption and for the grant of license, then it is exempt. Otherwise, it is not exempt, or rather, now it is a part of neither supply of goods nor supply of service. So therefore, it is applicable only in case where it is grant of liquor licenses by the state government, and in all other expenses, all other fees which is being collected, the GST is payable. This was circular number 121. Let us go back to the chapter. Next is circular number 186 of 2022, 27th December 2022. Clarification on various issues pertaining to GST. So these are the clarifications which have been issued on 27th of December 2022. Let me share the file so that we can go through that. Yes. 186, circular number 186. Clarification on various issues pertaining to GST. Representations have been received from the field formation seeking clarification on certain issues with respect to 1. Taxability of no claim bonus offered by insurance companies. 2. Applicability of e-invoicing with respect to an entity. Now in para 2, it is going to clarify, in order to clarify the issue and ensure uniformity in the implementation of the provisions of law across the field formations, the board in exercise of its powers conferred under section 168 subsection 1 of the CGST Act hereby clarifies the issues as under. First, taxability of no claim bonus offered by the insurance companies. Because generally, if the premium is, let's say, X, and you have not claimed any insurance in that particular year, then in that case, a no claim bonus is being offered. So therefore, the question rose that whether this no claim bonus, which is being provided to the taxpayers or to the persons who are insured, whether GST will be applicable to this transaction or not. Whether the deduction on account of no claim bonus allowed by the insurance company from the insurance premium payable by the insured can be considered as consideration for supply provided by the insured to the insurance company for agreeing to the obligation to refrain from the act of lodging insurance claim during the previous years. So you will not be able, or you will not be claiming any claim for the previous years, and therefore to refrain from claiming any such claim pertaining to the previous years, can it be considered as a consideration? This is what was the question before the board, which is being clarified now. It says, as per practice prevailing in the insurance sector, the insurance companies deduct no claim bonus from the gross insurance premium amount when no claim is made by the insured person during the previous insurance periods. The customer or the insured procures insurance policy to indemnify himself from any loss, injury as per the terms of the policy, and is not under any contractual obligation not to claim insurance claim during any period covered under the policy in lieu of no claim bonus. So this is something which is very important, because it says that the person, the insured person or the customer is not under any obligation or any contractual obligation that he will not be claiming any insurance claim during any period which is covered in the policy. It is therefore clarified that there is no supply provided by the insured to the insurance company in form of agreeing to the obligation to refrain from the act of lodging insurance claim during the previous year, and no claim bonus cannot be considered as a consideration for any supply provided by the insured to the insurance company. So therefore now they have clarified that yes, no claim bonus is not a consideration. There is no supply, and therefore there cannot be any taxability so far as GST is concerned. Next, whether no claim bonus provided by the insurance company to the insured can be considered as admissible discount for the purpose of determination of value of supply of insurance service provided by the insurance company to the insured. Because as we have read section 15, or will be reading it threadbare, but as we all are aware that section 15 defines, or section 15 provides for the value of supply. Value of supply is deducted by the value of discount, which is either specified in the contract or it is specified in the invoice. So therefore now the question is that this no claim bonus, can it be reduced from the gross insurance premium for the purpose of value of service or value of supply, and accordingly the tax be paid? Let's see what is being provided by the as a clarification by the board. As per clause A of subsection 3 of section 15 of the CGST Act, the value of supply shall not include any discount which is given before or at the time of supply if such discount has been duly recorded in the invoice issued in respect of such supply. The insurance companies make the disclosure of the fact of availability of discount in form of no claim bonus, subject to certain conditions, to the insured in the insurance policy document itself, and also provide the detail of the no claim bonus in the invoices also. The pre-disclosure of no claim bonus amount in the policy document and specific mention of the discount in form of no claim bonus in the invoice is in consonance with the conditions laid down for deduction of discount from the value of supply under clause A of subsection 3 of section 15 of the CGST Act. So they are saying that it in the invoice itself it is being reduced. So therefore it complies with the conditions of discount and it is deductible. Further, it says it is therefore clarified that no claim bonus is permissible deduction under clause A of subsection 3 of section 15 of the CGST Act for the purpose of calculation of value of supply of the insurance services provided by the insurance company to the insured. Accordingly, where the deduction on account of no claim bonus is provided in the invoice issued by the insurer to the insured, GST shall be leviable on actual insurance premium amount. That means the amount, let's say X, no claim bonus is Y. So X minus Y is the amount on which the tax should be paid, payable by the policy holders to the insurer after deduction of no claim bonus mentioned on the invoice. This was for no claim bonus. Next is clarification on applicability of e-invoicing with respect to an entity. Question is whether the exemption from mandatory generation of e-invoices in terms of notification number 13/2020 of central tax dated 21st March 2020 as amended is available for the entity as a whole, or whether the same is available only in respect of certain supplies made by said entity. Now the clarification is the question is whether it is applicable qua entity or whether it is applicable qua certain supplies. So the clarification given by the respected board is in terms of notification number 13/2020 as amended, certain entities sectors have been exempted from mandatory generation of e-invoices as per sub-rule 4 of Rule 48 of the CGST rules. It is hereby clarified that the said exemption from generation of e-invoices is for the entity as a whole and is not restricted by nature of supply being made by the said entity. So therefore, it is for the entire entity. It is for the entity, qua entity, not qua supply or transaction. Illustration. A banking company providing banking services may also be involved in making supply of some goods, including bullion. The said banking company is exempted from mandatory issuance of e-invoice in terms of notification number 13/2020 as amended for all supplies of goods and services and therefore will not be required to issue e-invoice with respect to any supply made by it. So therefore, the entire banking industry company, will be out of the requirement of issuance of the e-invoice. It is not only this transaction will be exempted from issuance of e-invoice, it is qua the company. So this was circular number 186 of 2022. Let us go back to the chapter. So the circulars are over. Now next table is relevant letter trade notice removal of difficulty order. 4/2019, 29th March 2019. To remove difficulty in case of supply of services covered in clause B of paragraph 5 of schedule 2 of the CGST Act. This is pertaining to the construction and all. So let me first share the file and then we'll have discussion. Yes. So it is being clarified. You all might be aware that there were certain notifications which were issued, and the option was given under the residential scheme. Either you may pay under 1% or 5%, and the credit was removed. There was no scope or there was no option to avail the credit and continue unless the project is old. So all those notifications came. Then the RCM was to be paid in case of the joint development agreements. So these are certain clarifications pertaining to those notifications. 4/2019. I think this is not the removal of difficulty order, but it is practically notification which is attached by mistake. Give me 1 minute. I'll try to show you this removal of difficulty order. We'll rectify this in the material. Give me 1 minute. Here into orders. Is the screen visible?
Yes, sir.
So friends, this was the removal of difficulty order, which unfortunately was wrongly uploaded in that particular link. So it is the Central Goods and Services Tax removal of difficulty order so and so 4/2019. Whereas subsection 17(2) of the CGST Act provides that input tax credit shall be restricted to so much of the input tax as is attributable to the taxable supplies. And whereas subsection 3 of section 17, I think we'll be covering this during that also, but let us complete this. And whereas subsection 3 of section 17 of the said act provides that the value of for the purpose of subsection 2 of section 17 of the said act shall be such as prescribed by rules. Now, therefore, in exercise of the powers conferred by section 172 of the act, the central government, no recommendation of the GST on recommendation of the GST Council, hereby makes the following order. This may be called as CGST fourth removal of difficulty order. For removal of difficulties, it is hereby clarified that in case of supply of services covered by clause 5B of paragraph 5 of schedule 2 of the said act, the amount of credit attributable to the taxable supplies, including zero rated supplies and exempt supplies, shall be determined on the basis of the area of construction of the complex building, civil structure or a part thereof, which is taxable, and the area which is exempt. So they have clarified that if you have to calculate what is the amount of credit that needs to be reversed or that need not be taken, it has to be calculated on the basis of area. This is the removal of difficulty order. Anyways, we'll try to rectify this portion of the material. There is some error. No, there are no forms. And see, we all are aware that section 7 is basically the taxable event in GST, which is supply. And whether a particular transaction or particular activity can be included in the term supply or not, and therefore whether tax will be applicable or not. There are various AAR and AAR which are filed. But my endeavor is not to cover AAR and AAR in this material and this discussion. So therefore, I am leaving aside all those AAR and AARs which are pertaining to section 7. But in the meanwhile, what I'll do is, or I'll try to do is, I'll try to prepare a chart wherein the name of the AAR for pertaining to section 7 will be there. For the time being, the judgments which I have incorporated are more or less pertaining to the query or to the question which have been raised before the High Court by the taxpayers. So the first is before the High Court of Bombay. It is 213 of 2017. This was the petition filed before the High Court of Bombay in by Momubai Trust versus Suchitra. And the challenge was notification number 12 by 2017 of CGST and of Maharashtra GST. So the issue or the facts were whether GST is liable to be paid on services or assistance rendered by the court receiver appointed by this court, that is Bombay High Court, under order Excel of the CPC, whether GST is leviable to be paid on royalty or payments under a different head paid by the defendant, where the plaintiff alleges that the defendant is an illegal occupation of the suit premises. Now, these were some of the questions which were raised before the court, and the order was in favor of assessee, wherein the court said that no GST is payable on the royalty amount paid by the defendant to the court receiver as a condition for remaining in possession of the suit premises. Accordingly, the changes made is operative in operative direction contained in order dated 12th or 20th July 2017 is modified and operative direction shall be issued. GST, if any, deposited by the defendant will the court receiver but not paid to the concerned authority shall be adjusted against royalty amounts to be paid by the defendant to the court receiver for the future period. As I've already stated while discussing on the last occasion, when we were discussing the case laws, that it will not be possible for me to, uh, as we are discussing the circulars, it will not be possible for me to go through all the judgments. Otherwise, this will become a never ending story. It still will become a never ending story because to cover more than 200 circulars which have been issued, so many notifications, and the brief of the case laws, it is anyways going to take a lot of time. But if we go further and try to read line by line the orders, then it will be very, very difficult to uh, cover this entire subject. So therefore, I am skipping it. In the material in the book, the QR code is there and the link will be there from the next edition. And we are also in the way in the preparation to come out with some online solutions also very soon. So therefore, excuse me for not opening the order. Otherwise, the orders are already attached. The original order, if you can, I'll just show you. It is on your screen. If you can see, it is an 83 pages order. So it's not possible for covering such kind of orders in detail while discussing the provisions of the law in this particular series. But yes, if I find that there is something which is very important, then certainly I'll be dealing with that. So if I have to read the conclusive part, the Honorable High Court said, in conclusion, I am of the view that in the facts of the present case, no GST is payable on the royalty amount paid by the defendant to the court receiver as a condition for remaining in possession of the suit premises. Accordingly, the changes made in operative direction contained in para 8(4) of the order dated so and so is modified and operating direction shall be read as follows. The defendant shall be appointed as an agent of the court receiver under the agency agreement on payment of monthly royalty of 45,000 to the court receiver without any security. GST, if any, deposited by the defendant with the court receiver but not paid to the concerned authority shall be adjusted against royalty amounts to be paid by the defendant to the court receiver for the future period. So this has been held by the Honorable Court. I hope you all will be understanding the my difficulty that I'll not be able to cover such longer decisions. It will not be feasible for all of us. But yes, as I have already committed, and we were already having a case mining series, which is on hold for the time being since last 2 years, and maybe it will continue for next 1 year. But I assure, and it's my commitment that I'll be taking up those series also, and I'll be completing those series. But due to some personal constraints, I am not able to do that as of now. Anyways, moving further. Next is again High Court of Sikkim, again in favor of assessee. It's Sun Pharma Laboratories Limited versus Union of India. WP writ petition civil number 9 of 2020. Now it is pertaining to section 197, section 54, rule 92(3). So it certainly will not be 197. It needs some correction. There is some error. So therefore, I will not be dealing because it is not pertaining to section 7. There has to be some part of section 7. Otherwise, this will be certainly incorporated. We would have incorporated in section 54 also. Anyways, the query was whether excess payment of tax in the month by mistake be adjusted in returns of subsequent months? And in case where such an adjustment is not feasible, can the refund be claimed? Now, obviously, if you are not allowing to adjust, then the refund has to be given. Otherwise, that will be an amount which is collected without authority of law and therefore violative of Article 265. As simple as that. So, the Honorable Court said that it was determined that the excess tax paid in 3B is not genuinely an excess tax payment because the system will automatically correct. So, a refund is not necessary. The petitioner argues that any extra tax payments were not carried over to other months. The petitioner must be given the chance to explain the position to the appellate authority. The impugned order is quashed and set aside by the Honorable Court. Petitioner is permitted to file a representation before the appellate authority. The appellate authority shall pass an order within a considering the claim which is made by the petitioner. Next is make money or organics. Again, section 129 is there. Special civil application 14008 of 2019. So we'll be covering when we'll be covering this 129. The next is also same. This is now it comes 7.36 WPO 588 of 2019, Honorable High Court of Calcutta. This is under section 7. Now, the case is petitioner's claim of PPSB bedsheet are produced in a finished stage by processing the non-woven fabrics manufactured by the petitioner. Revenue contended that petitioner does not consume PP granules directly into the manufacturing of bedsheet. Instead, non-woven fabric is manufacturing for PP granules is used by it, which is used in manufacturing of PPSB bedsheet. Assessee filed an appeal against the above view of department before the authority concerned. The petitioner has declared that its product should be classified in Chapter 63 of the Customs Tariff Act and HSN code so and so, and the petitioner submit in its return 5% of the GST on its sale. Aforesaid claim of the petitioner has been rejected. Void order number and dated so and so by holding that under the Customs and Central Excise Tariff Act, articles in question is covered under Chapter 56 to 62, is not covered under Chapter 63. And it also held that non-woven fabric and PPSB bedsheet manufactured by non-woven fabric are the same textile fabrics, and therefore the bedsheet manufactured by the petitioner should be considered in Chapter 56.03 at par with non-woven fabric and to be taxed at the rate of 12%. Petitioner has challenged the above order before this Honorable Court. Now, the decision was given in favor of the petitioner, and the liberty was granted to the petitioner. What does it? The court said, only scientific and technical expertise can give a new opinion as to the nature of the material used and method of manufacturing involved in production of the articles in question. And after taking into consideration the aforesaid scientific and technical aspect, appropriate authority under the law can come to a conclusion and make a declaration as to under which heading of the classification list product in question will fall. I am of the considered view that this is not a case where any violation of principle of natural justice has been committed or any procedural irregularity has been committed by the authority in passing the impugned order, or violation of any specific statutory provision of law has been committed by the appellate authority concerned in passing the impugned order. In view of the discussion above made, this writ petition so and so is dismissed. However, considering the prayer made by the petitioner against the after passing this order seeks liberty to raise the issues in this writ petition in future before the appellate forum or tribunal when it will be available. Such liberty is given. So therefore, the liberty is given to the petitioner that they can approach to the honorable tribunal and get this issue adjudicated. Next is 7.37 writ petition number 8600 of 2022. And the date of order is 23rd of March 2023, a latest judgment. Ernest and Young Limited versus Additional Commissioner CGST Appeals Delhi and another. Section 7. The petitioner is an Indian branch office of Ernest and Young Limited, a company incorporated under the laws of United Kingdom. The petitioner was established pursuant to the permission granted by the RBI on 4th April 2008. Prior to the enactment of the Act, the petitioner was registered with the Central Excise Department as a separate tax entity for purpose for providing services of management or business consultancy services, rent a cab scheme operator service, manpower recruitment supply agency service, legal consultancy services for the purpose of service tax. E&Y has entered into service agreements for providing professional consultancy service to various entities of Ernst and Young Group on arm's length basis. So there were certain service agreements which were being provided for professional consultancy into various entities of E&Y. In terms of the aforesaid service agreements, the overseas entities has retained E&Y Limited, acting through its Indian branch, to provide certain professional services. The agreements dated 29th of September 2009 entered into between E&Y Limited and EY US. Agreement dated 25th October 2010 between EY Limited and EY Australia. Agreement dated 5th January 2018 between EY Limited and EY New Zealand. Agreement dated 20th December 2012, EY Limited versus EY UK, and agreement dated 25th September 18 between EY Limited and EY US. Now, the terms and conditions for rendering services under the aforesaid agreements are broadly similar in material aspects. For the agreement dated so and so between EY Limited and EY US, the invoices raised describes the nature of services for the invoiced amount as professional fees for services. This was the nature of service which was incorporated in the invoice. Now, petitioner has applied for refund of ITC, availed for providing its professional services for the periods December 17 to March 20. The adjudication authority issued show cause notices dated 2-1, that is 2nd of January 2020, 13th April 2020, 23rd April 2021, corresponding to the 3 refund applications for rejecting it. The petitioner responded to the said notices stating that services are in the nature of management consultancy, professional consultancy services, and services are being provided to EY entities located outside India. In terms of service agreements entered into between EY Limited and the respective entities for which the consideration was received directly from the overseas EY entities in convertible foreign exchange. So the argument was that this is an export of service and therefore the accumulated input tax credit should be refunded. The petitioner's ITC had accumulated on account of supplies availed by the petitioner for performing the services. The adjudicating authority proceeded on the basis that the services provided by the petitioner were intermediary services, and since the petitioner was located in India, the place of supply of service was not the location of the recipient of service, but the petitioner's location in India, that is the location of the supplier. Petitioner, being agreed with the viewpoint, filed an appeal. The appellate authority upheld the decision of the adjudicating authority that is services rendered by the petitioner were intermediary services, white ordered in appeal. Now, important is for us to understand that what is an intermediary service. But since this is a judgment, I'll not be discussing that. We'll be discussing only the what was provided in the judgment by this honorable court. And as we have already read, that this is the Honorable High Court of Delhi. The Honorable Court said, in the present case, the place of supply of services has been held to be in India on the basis that the petitioner is providing an intermediary service. Services rendered by the petitioner are not as an intermediary, and therefore the place of supply of services rendered by the petitioner to overseas entities is required to be determined on the basis of location of recipient of the service. So the Honorable Court said that this is not an intermediary services, and therefore the location of the recipient will become the place of supply. Since the recipient of services is outside India, the professional services rendered by the petitioner would fall within the scope of definition of export of service as defined in clause 2.6, section 2.6 of the IGST Act. There is no dispute that the recipient of service, that is EY entities, are located outside India. Thus, indisputably, the services provided by the petitioner would fall within the scope of definition of term export of service under Section 2, Clause 6 of the IGST Act. The petition is accordingly allowed. The impugned order, as well as the impugned orders in original aside, the adjudicating authority is directed to process the petitioner refund adjudication application as expeditiously as possible. So this was decided in favor. Again, harsh polyfabric, this we have already discussed. It is repeated. This again is repeated, Ernest and Young. Now, these are the judgments which are in favor of revenue. The first one is 760 of 2022, Honorable High Court of Allahabad, K-Pen Fragrances Private Limited versus Union of India. Now, what does it say? The query before the Honorable Court was whether Section 7 read with Schedule 2 of the CGST Act and UPGST Act, insofar as it includes the transaction of sale within the scope of supply and levy tax on such sale, is ultra vires the Constitution of India. So, Section 7, the inclusion of the term sale in the term supply scope was challenged before the court. The term supply under Section 7 of the CGST or UPGST Act includes all forms of supply for providing goods or services or both, including sale, transfer, barter, exchange, license, rental, lease, and disposal, made or agreed to be made for a consideration by someone acting in course or furtherance of business. The government may designate by notification transactions that are to be treated as providing goods and not services, or a supply of services as an intermediary. As a result, Section 7 defines supply broadly and offers an inclusive definition that includes sell. So therefore, as per the Honorable Court, there was no invalidity in the definition or in the scope of supply as per Section 7. This is pertaining to Section 74, so I am skipping it. Schedule 3. This can be covered because Section 7 has to be read with Schedule 3. There is public interest litigation. Stamp number 22 of 2019, High Court of Bombay. Gurdeep Singh Sachar versus Union of India. Schedule 3 and Rule 31 capital A. Petitioner sought direction to initiate criminal prosecution against respondent number 3, a company named Dream 11 Fantasy Private Limited, on the following grounds. It was carrying out illegal operations of gambling, betting, wagering in the guise of online fantasy sport gaming, and hence should be penalized under the Public Gambling Act. Alleged evasion of GST payable by it by violating the provisions of the statute, because we all are aware that Schedule 3 incorporates, or Schedule 3 is, these activities are neither supply of goods or services, and in that there is an entry. Actionable claims other than betting, lottery, betting, and gambling. So it says that the evasion of GST is there. It was contended that a fantasy game of this nature is merely a game of chance or luck, which is thus gambling, betting, wagering, being different forms of gambling. He further states that as a result of above mentioned activities, some players pay money and enter into contests, and after the matches, winners get more than their contribution and others lose money. According to the petitioner, even if this acknowledgement amount is separately kept in escrow account, GST would be payable even on this amount. The Honorable Bombay High Court said that success in assesses fantasy sports depend upon users' exercise of skill based on superior knowledge, judgment, and attention, and result thereof are not dependent on winning or losing of a particular team in real world game on any particular day. It is a game of skill and not a game of chance. So court says that this is a game of skill and not a game of chance. And anything, if it is not by chance, then certainly it will be covered for the purpose of livability. So though amounts pooled in the escrow account was an actionable claim, same was to be distributed amongst winning participating members as per outcome of the game, but it would fall under entry 6 of Schedule 3 under Section 7(2) of the CGST Act, since activities of assessee did not amount to lottery, betting, and gambling. So court has said this is skill based game, and therefore it is not lottery, betting, or gambling. Hence, actionable claims referred to in Rule 31A of the CGST rules. In relation to activities or transactions in form of chance to win in lottery, betting or gambling or horse racing is a race club. In a race club had no application in the instant case. Therefore, assessee was correctly paying GST for online gaming under the Act as per the provisions at the rate of 18%. Now, this is an important judgment. Next one. It has traveled to the Honorable Supreme Court also. Writ petition number 12194 of 2017. It is pertaining to Schedule 2, Builders Association of Navi Mumbai versus Union of India. And it includes a very important question, which is the point of discussion as on date. There are lots and lots of notices which are being sent on transfer of the Industrial Development Corporation lease assignments. So let us see the facts of this particular issue. SIDCO disposed of land for development for 60 years to various builders and developers under Navi Mumbai Land Disposal Amendment Regulation 2008 by charging them a one-time lease premium. In addition to this one-time lease premium, a separate lease rental was charged annually for the period of lease. The assessees won the bid for securing lease of such land from SIDCO in areas of Navi Mumbai and Panvel. However, the assessees questioned the levy of GST separately on the one-time lease premium amount at the time when allotment letter was issued. The assessee contended that GST could not be levied, assessed, and recovered. The assessees also contended that whole transaction is akin to sale. If that is the position, then Section 7 cannot have any application. Therefore, as per the contention of the assessees, the one-time premium which is being collected for this lease for more than 60 years or whatsoever period is nothing but the consideration for sale of land. So writ petition in this case was dismissed on the following grounds. 1. If 1 refers to Schedule 2, Section 7, then item number 2 is styled as land and building, and any lease tenancy license to occupy land is a supply of service. 2. No activity of the nature mentioned in the inclusion provision can thus be left out of the net of tax. Once this law in terms of substantive provision and the schedule treats the activity as a supply of goods or supply of services, particularly in relation to land and building, and includes a lease, then the consideration therefore as a one-time or as a premium is a measure of which the tax is levied, assessed and recovered. So it was held that demand for payment of GST is in accordance with law and GST is chargeable on one-time lease premium also. And then in GST there was an amendment. There is also a notification which is exempting the one-time premium which is being collected by the state authorities, the central government, and the Industrial Development Corporation. So nowadays the dispute is pertaining to a third-party transfer, that I am procuring from the state government or procuring from the Industrial Development Corporation, and then I'm transferring this leasehold right to some third person. Then what will happen in that case? This is the issue which is being discussed day in and day out, and a lot of notices are being issued. And this is pertaining to the intermediary services we'll be discussing while discussing Section 13 of the IGST. Then comes High Court of Madras, writ petition number 20948 of 2022. Date of order is 2nd of September 2022. The instant petition has been filed challenging the notice issued by the respondent, where the petitioner was asked to pay GST on seigniorage fees paid by the petitioner to the Geology and Mining Department. Now, the Madras High Court, while considering the observation made in Lakhvinder Singh versus Union of India and others, submitted that impugned order is only a notice and directed the petitioner to appear before the respondents and make his objections with necessary documents. So this is only an interim. I'll just open the order of the court. This is the open. This is the order of the court. We'll go to the operating part. Let's see what does it. So this was only a notice issued under section 63. So the court says it is only a notice. It is for the petitioner to file his objections along with the supporting documents and citations referred by the petitioner. Thereafter, the state tax officer to consider and pass appropriate orders. So it has been remanded back. Considering the materials and perusal of the materials available on records, it is seen that the Honorable Apex Court in the case of Lakhvinder Singh versus Union of India and others had granted a stay for payment of GST for mining, granting of mining lease royalty by the petitioner. Further, it has been followed consistently by various courts, including this court. It is further seen that the impugned order is only a notice. The petitioner is directed to appear before the respondent and make his objections with necessary documents. The petitioner is directed to approach the second respondent within a period of 30 days from the date of receipt of copy of this order and make his objections. Further, the second respondent is directed to consider the petitioner's objection and dispose the same in accordance with law following the judgment of Honorable Apex Court. Till such time, status quo to be maintained by the respondents. Therefore, the matter was remanded and the direction was to follow the Honorable Supreme Court, which has stated the applicability of GST or leviability of GST on the mining activities. And then these are certain miscellaneous orders which I have incorporated, which the details facts are not there, but the orders are attached. So the book has been developed in such a fashion that if we would have incorporated all the judgments, it was very bulky. So therefore, we have taken few judgments which are very important as per us, and the rest of the judgments, the orders are there. You can download the order as like clicking on this, you can have the original order. This is the order. You can go through this order and then use as per your requirement. So today we have discussed section 7. We have completed this. Now, I think tomorrow we'll be taking up section 8 onwards. So I'll be requesting all the participants to kindly refer section 7, the circulars that we have already done, and also the case laws. As I've already stated, I'll not be covering double AR and triple AR, and there are lots and lots of double AR and triple AR so far as section 7 is concerned. Whether it will be supply or not, whether the taxability will be there or not. But as a policy, I'm not incorporating that in our discussion. So therefore, please excuse me for that and please refer the double AR and triple AR on your own. Now from section 8 onwards, we'll be discussing tomorrow. So once again, I'm thankful to each one of you for being patient and to join me to revise this entire law along with the circulars, notifications, and all the respective documents. Thank you. Thank you very much.